What is the market telling me this week? Welcome to the Nick Rutherford Report. And the market is either going to take advantage of you or you are going to take advantage of the market. So hit that like button, leave me a comment, subscribe to this channel, share this with someone who would get a lot out of it, because this is the place to be for the financial news that matters for your net worth. Let's get to it. This week in the news that I'm watching very closely are articles like this. Dramatic footage shows oil tanker hit by kamikaze boat drone in the Red Sea. Why is this so interesting? This is interesting to me because not just because one ship had a problem, but if this develops into a theme, it could be a big problem because so much oil transits through the water, transits, I'm using the wrong word there, transits through the Red Sea and the Strait of Hormuz. If the war expands over there or people decide to start shooting these little cheap drones at these massive oil tankers, then it could drive the price of oil significantly higher. And this matters because the economy runs on oil. And if oil is higher, well, economic demand is going to go lower because more people have to spend their disposable income on gasoline and oil products, and the entire economy runs on oil. All of the products that you buy are moved around the country using diesel and trucks, and if that's more expensive and everything that has to do with it, there's a chain reaction. So I'm watching this very closely to see if a trend develops. The good thing for me is that I bought tons of oil stocks back in 2021 when they were extremely cheap. I wouldn't rush out and buy them now at all because they're fairly priced or expensive, or who really knows. But it's very obvious to me now they're not extremely cheap. And I like to buy things when they're low so that I can sell them when they're high. This is the number one investing principle that I use. And I'm bringing this up just because it's a trend that I'm watching, and I always want to be able to take advantage of trends. So what could happen with this? Well, if it continues as a trend, the economy could slow down in a dramatic way, assuming it happens a lot. 1-2 times, I'm not really worried, but if it starts to expand, I'm definitely worried. So it's something that I'm watching because it will be a trend that I'll be able to take advantage of. So let's continue along with some of the most interesting news articles. The other day, we saw a huge beat in U.S. retail sales, which is great. That means people are buying more things and the economy is going to keep running, because if people are buying things, well, corporate profits are going to go up, and Wall Street loves when corporate profit goes up. That means investments go up. So this is very interesting. But I do notice how the entire news media took a shift over the last week or so, talking about just the future of Trump's policies, such as low taxes, sky-high tariffs, Powell not fired, and Treasury Secretary Diamond, and much more. And why do I bring this up? I bring this up because after everything that happened at the Trump rally with the attempted assassination, a lot of people believe that Trump has a stronger chance of winning the election. And I'm not being political here in any way. I'm just pointing this out, that Wall Street is now using this to take advantage of you. Because all of a sudden, what happened next? Well, the chips, like Nvidia, crashed dramatically. Everyone's worried, well, what about these tariffs? And you can see that the NASDAQ and the S&P 500 crashed a ton because Nvidia is such a big portion of them. Because, well, it's time for everyone to freak out. Well, hold on a minute here, because back in 2018 through 2019, there was an equipment ban on Huawei. I'm not sure if I'm pronouncing that correctly, but there was a big thing over exports and chips back in 2019, which caused chip companies to absolutely crater. In fact, this is when I opened my largest position on Micron to take advantage of what I saw as the coming AI trend and just the fact that we would need more and more and more chips. And I love to buy things and make investments when everyone's freaking out about them, assuming I'm doing my research to understand what's going to survive whatever the current freakout is. This allows me to buy low and sell high. So if I look closely into things like NVIDIA's earnings, well, if you look at this here, NVIDIA's earnings by region, well, China right here, according to this stat, is 9.56% of their earnings. So let's just round that up to 10. If you lose 10% of your earnings, it's not catastrophic. It's not going to destroy the future of your company, and it's certainly not going to derail the AI revolution. So why everyone turned to freaking out over this potential tariffs and bans in the future? Well, this all goes back to Wall Street taking advantage of you. Because if they can sway your emotions, what Wall Street will do is their goal is to get you to sell and buy at the exact wrong time so they can take your money. And I don't want to be suckered into that, and I don't want you to be suckered into that either. So let's continue on to another theme that has emerged. Everyone all of a sudden is talking about, well, the stock market is blisteringly expensive. And if you look at articles like this on Zero Hedge, you can see the CAPE chart here from 1900 to current that is just a way of measuring valuations. I don't think we need to get into the specifics of it because it's not important. It's just designed to confuse you. All that matters is the market going up or is the market going down? And what is the data telling me to support that? Because, yeah, it's expensive, but it could get twice as expensive before things wind down. If I look at Microsoft, and we look at Microsoft, it's now more expensive than ever on a price that you have to pay for the cash flow that you're getting. You can see that the chart is up and to the right, and it's more and more expensive. Why is this happening? Well, people have jobs, and everyone loves to buy index funds because over the last 10 years, everyone has been convinced by advisors and people who don't want to take the time to do the research that you'll just be all right if you buy an index fund. And guess what? If Microsoft is 5% of that index fund, well, if everyone's got jobs and they're throwing money into the market, stocks go up. It's very simple. And everyone wants to make investing extremely complicated. But in fact, it is very, very simple. You just have to watch what the market is telling you. And that's the whole purpose of this show. Because I'm going to talk about what happens next. What do I see happening next? Well, I'm not worried about all of these articles. Instead, I want to look at data because data is going to tell me what to do and the market is going to tell me what to do. All of these news articles are just designed to take advantage of me. So one of the things I've been watching every week on this show is unemployment because it's extremely important. And the data I look at with unemployment is because if someone's employed, they're getting money and they're using that money to buy stuff. And the stuff they buy becomes corporate profits and it just feeds in a circle. And then the corporates make more money and they hire more people and they're more employed and they buy more stuff and it goes in a circle. Because one person's spending is another person's income. And that just feeds the whole process. Some people want to get excited. They want to say it's a Ponzi scheme. They want to say the economy is going to teeter into a depression or melt up into whatever. All of this is complete nonsense in my view. The only thing that matters is, are people making money? Are they spending money? Because then it's human nature. Buy stuff, make better stuff, sell stuff. Keeps going on. Very simple. When I boil it down, it allows me to make the right investment decisions. So let's look here at the Fred database of initial claims. Why am I looking at initial claims? Well, simple. Initial claims are when people lose their job and they start filing unemployment. And you can see it's just been steady sideways the entire year. Nothing exciting, nothing crazy, nothing to freak out over. What is interesting, what I'm watching very closely, is that the continuous claims here are rising. So you can see throughout the entire last year, they were flat, bouncing between 1.7 million, I misspoke there, and 1.8 million. And now it looks like they're rising slightly above 1.8 million. And if this continues to go up, then the market will be telling me it is time to freak out. But right now, all it's telling me is be extremely, extremely cautious because the trend could potentially be changing. And I'm not saying that in any sort of fear-mongering way because unemployment hasn't signaled a problem since the plague. And before that, it hadn't signaled a problem since the great financial crisis. So we're talking about the third time now that it is almost there to signaling a problem. So this is a very rare occurrence. So it's something I'm watching very closely because the market will tell me what to do. And if you like to look at data and let the data tell you what to do, then leave me a comment saying data, because the more comments I get, the more subscribers I get and the more YouTube pushes this, which then of course allows me to make more content because YouTube's paying me ad revenue, and then I'm happy. And of course you'll get better data because I'm doing it more and more. So let's continue down this path here, because when the facts change but the numbers don't, we need to pay attention. And Michael Howell, I'm not sure if I'm pronouncing it right, is someone that I love to follow. So this is his Substack. It's called Capital Wars. And he has one of the most underfollowed, most important pieces of data that he tracks that I believe is one of the biggest indicators for what will happen in the future. We were just talking about jobs and unemployment. Now we're going to talk about money, because money drives everything. And what Michael tracks is the global liquidity cycle. And this is how much money there is sloshing around in the economy. Because the more money there is, well, if people have more money, if institutions have money, I don't care who has the money, they got to buy something because it's burning a hole in their pocket. Whether it's stuff that feeds into earnings or assets, it bids up the prices of assets. The more money, the higher prices of things are going to be. If they're lower prices, well, people are buying more stuff, and that feeds into higher prices of assets because earnings are going up. It's extremely, extremely simple. And my job is to make all of this complicated stuff simple so that I can make money from it. That's why I want to buy low and sell high and continue to hold on to my great investments as the data tells me to hold, or buy or sell. And right now it's telling me to hold. And why is that? Well, because Michael is tracking the global liquidity and he's tracking the amount of money. And what he says here is that it looked like it bottomed in October 22 and it looks set to expand until the next peak sometime around late 2025. So he's tracking this. This is his specialty. You can go on Substack and look at all of his stuff. And there's a great chart that he has created here that you can see it expands and contracts every 4 or so years. And obviously, if it's expanding and then contracting, and if it's contracting while the labor market is going down or up or whatever, I'm tripping over myself here because I don't have it in front of me. What I mean is I'm not entirely sure what's going to happen while it's expanding. If the job market breaks, then I'm going to freak out. But if the job market is teetering on breaking, but the liquidity is still expanding, I'm not really worried. And we're well into 2024 here. This is actually an old picture. I've seen a newer picture where it's somewhere up here already. And he's expecting it to continue to expand into September 2025. So I'm not calling for a top in September of 2025, but I'm saying this is a time to be more cautious. All I'm doing is looking for indicators in the data for me to be more cautious. And then if I get a confirming market signal from the actual market, then I'll freak out. So let's look at some other interesting pieces of data that I've seen this week that are confirming things that are causing me to be even more cautious than I've been in the last few months that I've been producing this show. So here on the Thoughtful Money podcast, Adam Taggart has a great guest, Michael Green, and he tracks the amount of flows going into ETFs. And here's a great chart. You can see that in his chart here, his combined total market index shares of outstanding index, people putting money into the index fund. The specifics are not important. The concept is important. You can see that more and more people are putting more and more money into index funds, but lately it's kind of been topping out. So I'm thinking of this as a green and red light. If people are putting money in, stocks go up. If people are pulling it out, stocks go down. It's very, very simple. This all ties to the same concept. More money, higher stocks. Less money, lower prices and big problems. So this is something that I'm watching very closely, because when I combine this all together with the jobs and the liquidity, these are the pieces of data that are really going to drive and make or break the market. So right now, I'm just looking at the derivatives of the unemployment to see if it's accelerating or decelerating. And when it hits the same points that it has in previous potential crashes, previous crashes, that could indicate that it is a time that we could have a crash. So the data is going to tell me what to do, but what happens next and what happens right now, what am I doing about all this data? Well, it's very simple. I'm looking at the market, and the market is going to tell me what to do, and I'm going to keep saying the same thing because Wall Street is just trying to take advantage of everyone else, where I want to look through that fog and have the market tell me what to do. And what is it telling me? Well, look at this chart here. This week, the S&P is going up. So in 2022, I was very worried. The data was going down. So I was half out of the market, and then I went back into the market in this area here. And now I'm just riding the wave back up because the data is still telling me that it's good. It's looking more and more shaky with things like the unemployment that I've been covering. But look, the trend is up. So I'm not going to fight the market, because if everything turns, I'll lose a little bit of money, but I can't pick the top. And then I'll be defensive as it goes down. Then I'll try to pick the bottom. I won't be right. And then I'll ride it back up. Think of it like surfing. That's how I'm thinking of it. I'm surfing the waves of expansion and trying to avoid some of the waves of contraction. And this is going to keep happening. It's fueled by liquidity, it's fueled by earnings, and it's fueled by money at the end of the day. And then it's exacerbated by fear and greed. So we want to try here to eliminate fear and greed. Just look at the data and follow the trends. Continuing along that trend, the most important trend is the AI trend. Is it real? Is it not real? It really doesn't matter. It only matters what people think. And what people think is what they invest on. And what they're investing on is it's real because NVIDIA's up. And they think it's going to still be up because it's trading at 70 times earnings. And right now it's consolidating sideways. Based on my research, I'm guessing that it's going to beat again and go up in the next earnings. Now, of course, I could be completely wrong, and that's only based upon the fact that they've been selling so much of these graphics cards for their HB300s or whatever they're called. They're selling so many of them, they're sold out, and they keep upgrading ChatGPT. It's too early for them to really know if it's profitable or not, but NVIDIA doesn't care because they're just selling the tools for the AI revolution. And if people are buying, well, stock goes up. More money, stock goes up. And it's consolidating sideways. Now, if this starts to go down and the trend is down, then I'm going to be really worried combined with the data. But right now, it's up. If I look at Bitcoin, well, guess what? Bitcoin's up. One of the news articles that came out this week was that German government was selling all their Bitcoin. And since then, Bitcoin has been on a tear. Maybe I shouldn't even use the word terror because these headlines use the word terror, but like going from 17,000 where I bought it last time up to 66, that was a tear. Going from 57 to 66 is not a tear. It's just like a small increase. But oh no, got to have the good headlines. Wall Street's so funny. So here, what is my point? My point is S&P 500 up. NVIDIA consolidating sideways. It hasn't developed a head and shoulders pattern where it looks like it's puking, and it hasn't started to puke. It just went down a little on some nonsense news. And Bitcoin, well, consolidating completely sideways in the models everyone likes to follow, is in history. And I always love to use history as a guide to predict what could happen. And typically what has happened is the halving happens and everyone gets excited. So you got to remember, I'm the market, you're the market, everyone watching is the market. So what are they going to do? They expect it to go up. It's probably going to go up until it doesn't. I got to trade off of what everyone thinks is going to happen, not what is going to happen, because that makes the market. And all the data here, and I know I'm completely rambling, and the reason I'm rambling is because there's a lot more data and it's a lot more concerning. But at the same time, it hasn't reached the level of concern where I'm freaking out. And don't worry, when it's not like this, I won't be freaking out, because you have all these perma bears who call for the exact same thing over and over again. It's really kind of comical. So my point here is everything looks good. I'm very, very cautious, but now it's the end of the week, so I'm going to go sit by my pool and I'm going to drink some scotch and relax with my dog and maybe go swimming and not worry about it, because until the data tells me to do something different, I'm just going to watch the market and count my money. So stick around for the next time I have an update when the market actually tells me what to do, and then we'll do it. Or I'll do it, because I'm not going to give you any advice. But my point here is you can watch what I do and then decide for yourself if it makes sense or not. So until then, hit that like button, leave me a comment if you like this, even just comment yes, just so this spreads, and subscribe to this channel. If the market tells me what to do, I'll come on and make a video. Until then, I'll be on it next Friday at 4 p.m. Have a great weekend. How am I using this information to protect and grow my wealth? Go to highreturnlowrisk.com.